Shares of GameStop fell as much as 6% on Friday after reported same-store sales at its gaming retail stores fell 6.2% due to weak demand for consoles and software. The company also took a cautious stance with its second quarter outlook. Joining me today to discuss the results is GameStop Chief Operating Officer Tony Bartel. Thanks for taking the time today. I appreciate it.
Brian, it's good to be with you here today.
Well, the first quarter retail season was pretty weak. I mean, we had Target, Walmart report tough results. My question is, how hard is it to get people into the malls right now, into GameStop stores?
Well, into malls, I think that there is definitely a slight decrease in mall traffic, but again, malls are a very small part of our portfolio. Our traffic is really driven by innovation, and there's a lot of innovation that's getting ready to take place in our category, so we're excited about that. And really our transformation strategy that's driving shareholder value is what's driving people into our stores. It's not necessarily just video games. In fact, we're not just a video game retailer anymore. We've added $2 billion categories inside of our stores with collectibles and with the digital business, and we've also created this whole new technology brands business, which is on track to be a billion-dollar business as well. So we're seeing significant traffic increases because of the expansion of that.
You know, GameStop stores have certainly evolved a little bit. We're seeing more, like you mentioned, I guess just interesting collectible items. But how disruptive is Amazon within that collectible market and the video game market right now?
You know, a lot of what we find is that people really want to see what they're buying. And if you think of a video game, or if you think definitely about a phone transaction, these are very complicated transactions. And so what we find is that the assisted sell is extremely important. Also, online retailers really suffer versus brick and mortar retailers when you have the buy, sell, trade element. It's really difficult to replicate that online. So people want to have great value. That's very important to the consumers today. And so they're going to be coming into the brick and mortar stores to get that value.
Sure. I mean, real quick, I mean, do you think Amazon will get into that trade-in business? I mean, it seems to be rumored for the past couple of years.
Well, a lot of people have tried to get into that business. There's a lot of barriers to entry on our buy-sell-trade business. You have to apply to laws in every state. You have to be able to refurbish all the product that you have. So a lot of people have tried, and again, it's based on the immediacy. People want to get the value when they want to purchase a product, so they don't want to have to wait a few weeks, send things through the mail, things like that. So what we found is that our buy-sell-trade model has a lot of defenses, and so we're very excited about that, and we think that it plays very well against the online retailers.
Well, we're a couple weeks away from the E3 convention, the big gaming convention next month. What are you expecting? I'm hearing rumors of potential new console releases from Sony and Microsoft, but what are you seeing?
That's a great question, and we're always excited about E3 because there's so much innovation in this category, and obviously that's what drives growth. So we expect to hear a lot about VR. I mean, VR is going to be a massive category. We just said on our earnings call yesterday that over the next 2 years, it'll be somewhere, we think, between $8 and $14 billion over the next 2 years. We think that we are going to hear about consoles. You've already heard about Nintendo NX that's going to launch in 2017. We estimated on our call yesterday, based on historical data, that could be between $3 and $8 billion over the next 2 years. And you're going to hear about some great new games that are coming out in the back half of the year. So always innovation, but those are going to be the key things that are talked about at E3.
No, I'm so bad at some of these new games. They take so much time. Just two more questions for you. You have a unique view, I think, on Apple. You operate what's called the Simply Mac stores in partnership with them. I'm curious, what does the supply look like for the Apple Watch? I'm not sure if you're familiar, if you can speak to any of that, but I'm curious because we're hearing some weak sales of the Apple Watch, but curious on what you see about that.
Well, we have a great partnership with Apple, and as you know, our Simply Mac stores basically are an opportunity for them with all of their R&D and with everything that they do. It's an opportunity for us to go into areas where they will not go into and provide sales and service. So we're seeing the Apple Watch in good demand and in good supply right now.
Interesting. And finally, you touch upon the transformation at GameStop earlier in the interview, and the stock is down 27% in the past year. Do you feel as though investors don't really understand what you're trying to do? I mean, you're selling wireless phones, you have the Simply Mac business, you're reinventing the stores. How can you start to change some of that perception?
I think that's a great point, and I think historically people have seen us as a seller of video games, and we are a good seller of video games, but we're so much more than that. And the transformation strategy that's driving shareholder value is really all about growing both within the store and growing outside the store. Inside of the store, we've created $1 billion digital category, and we're on our way to creating $1 billion collectible category. We sell exclusive collectibles that you can't find anywhere else, and we've quickly become one of the world's largest sellers of collectibles, bolstered by our ThinkGeek acquisition. Outside of the stores, we have technology brands which after we complete these 2 acquisitions that we're going to do this quarter, that will be on track to be a $1 billion brand as well, and it's going to grow over 3x what it did last year by the end of this year. So we're super excited about transformation, and there's a lot of innovation coming like we talked about at E3. So video games have a long tail, digital, tech brands, collectibles, and we also have a booming omni-channel business as well. So our transformation is in full swing. I think as people continue to see how we are going to continue to grow, and by the way, our GameStop branded stores are growing as well as our tech brand stores. I think as people see that, you're going to see more of that impacted in the stock price.
Favorite video game of all time, real quick?
You know, I'm a big Madden fan, so I absolutely love Madden.
Oh, great. Well, good luck this quarter. Thanks for taking the time.
Thanks, Brian.